Doing your taxes, let's face it, it's about as exciting as shoveling your driveway or mowing the lawn. Unfortunately, we all have to do it. And Uncle Sam certainly doesn't make it easy. The U.S. tax code literally fills thousands of pages. Thankfully, you don't need to read them all to stay on top of your taxes. Here to tell us 5 things that can make doing your taxes less taxing is Manisha Thakor, co-author of Get Financially Naked. Welcome, Manisha. Great to see you again.
Great to be here, Tanya.
So taxes, pretty much a dreaded word for just about everybody. But there are some things that we can do, makes it a little easier on ourselves. Let's talk first about tax deductions, because that's a little complicated and everybody, of course, wants them.
Right, and tax deductions are fascinating because a lot of people think that when you deduct something, it takes a dollar off your taxes for every dollar that you deduct, and that is not the way it works. The way the math works is you get your marginal tax rate times the amount you're donating. That's how much you save. So if you donate $1,000, 25% tax rate, you're getting a $250 savings, not the $1,000.
Disappointing news for a lot of people.
It is. It is. But it's important to know what kind of deductions, because any money saved is a nice benefit.
Absolutely. And you say in order to really tackle your taxes, the first thing that you really need to know are the kinds of taxes you're paying, right?
Exactly. And I'll tell you, it's really easy to think about taxes as this big jug of but there are different types, and I find it's helpful to break it down. So we pay federal taxes, federal income taxes, and oftentimes state and local income taxes if you live in the 43 states that have them. On top of that, we also pay Social Security tax at 6.2% up to the first roughly $107,000 you make, and Medicare tax, which is roughly 1.5%, and that has no income cap. So those are the 5 different elements that go into taxes.
And once you've got your handle on that, you can move forward and figure out the next step, which is that deductions are not automatic. You have to actually take them out yourself, right?
Exactly. I want to hug you, Tanya, because one of the most common comments I hear from people is, "Oh, a house is such a great investment because the interest is tax deductible." Deductions aren't automatic. You have to itemize your taxes in order to get the deduction, and 2/3 of Americans take the standard deduction. And it's important to know what are the different types of things that you can itemize. So interest on your mortgage is a classic one. Property taxes, state taxes, medical bills, and non-reimbursable job expenses that exceed a certain percentage of your income are also items that are eligible to be deducted.
Okay, now you say better than looking for tax deductions, what we should be looking for to cut down on our tax bill are tax credits.
Yes.
Can you explain what they are and how we get them?
Okay, so the tax credit is just the gold standard of what you want to find on your tax return, and that is a dollar-for-dollar reduction in your income taxes. So if you get a $1,000 tax credit, your tax bill is reduced by $1,000.
Fantastic. How do we get them?
Okay, so the 3 most common kinds are C, D, and E. So child care, dependent care, and then 3 types of E: energy, education, and earned income credits. Okay. And those are the most common types of credits that you can get.
So when you say energy, you mean your energy bill, literally?
Not quite. There are certain things that if you make certain types of improvements to your home to make them more energy efficient, the costs associated with those renovations might make you eligible to take a tax credit for those costs.
Did you say education was one of those?
As well. There are also, now again, everything with taxes has all kinds of caveats and nuances, so there are certain kinds of expenses associated with education that can qualify you for a tax credit.
And child care, which is of course daycare or babysitters even?
And unfortunately not babysitters. They're very strict and nuanced rules, and so the key thing here when it comes to finding out if you're eligible for credit is talking to a tax advisor.
Which brings up another great tip, which is that you really don't have to go this alone. Sometimes the money you pay to a tax advisor or accountant is the best money you've ever spent.
Honestly, it really is. I mean, I think about this. The tax code is literally, I mean, if we stacked it up, it would be taller than you and I standing on each other's shoulders. And it's so complex. And so spending, $100, $200, even in some cases $500 for a complicated return, honestly, great investment, especially if the advisor is able to help you find the credits and the deductions that can help reduce your tax bill.
Absolutely. Now, I know this might seem like a simplistic question, but a lot of people wonder, what should I be saving? You know, do I need to save my cell phone bill every month? Do I need to save every little receipt I ever, come up with? Or are there specific things I should be socking away?
So I'm very conservative. My advice to people is to save all of the documentation that you use to prepare your tax return for 7 years. And the reason is that the IRS has up to 3 years to challenge your returns, up to 6 years to audit you if they think that you have underpaid. Now, what does that mean, the backup? It's not every single receipt, but if you're taking a charitable deduction, you want to be able to document that.
So be conservative just to be safe.
Exactly.
Manisha Thakor, thank you so much.
ABC News Now. Good to know.